Yeah, I would continue to hold Micron here. I think we've seen this playbook over and over in recent months with companies that have AI exposure trading down on earnings reports just because the market really wanted more in the near term. At the end of the day, I think Micron is pretty well positioned from an AI opportunity with their HBM chip. Should be continue to generate millions of dollars of revenue. And the important part is that as investors, we've gotten a lot more visibility in the last 2 or 3 months in terms of the AI opportunity. And I think that's really important. So they continue to be well positioned. They should have the opportunity to generate well over $10 per share in earnings power, perhaps even materially more than that. So the stock is still reasonably valued. So if you own it, I'll continue to hold it here.
All right, let's move along then to one of the big stories of the day. Walgreens Boots on pace for their biggest drop ever after cutting the profit view and planning to potentially shut a lot more stores. Let's get the details from Bertha Coombs. Bertha?
Kelly, Walgreens hitting a 26-year low, in fact, after missing on the bottom line and lowering its outlook. The issue is margins at its pharmacies. At the back of the store, there's due to pressure from reimbursements from pharmacy benefit managers or PBMs. In front of stores, CEO Tim Wentworth told me consumers are still stunned, he says, by the stickiness of high prices. And then there's theft. The result, a quarter of stores are underperforming, and they're looking to close those unprofitable locations, shifting staff to better performing stores. But Wentworth is mindful of the impact in some communities.
We know that we are the last company standing in a lot of places. We are the only thing standing between those places and being pharmacy deserts. And our goal is not simply to be the last one to leave. Our goal is to actually find new ways to work together, whether it's with state Medicaid programs, whether it's with local law enforcement.
CVS is facing a lot of the same issues in its stores, but CVS is more diversified than Walgreens with a PBM and Aetna health plans, which help offset some of that impact on the brick and mortar. Back over to you.
All right, so Anthony, on that news and on the stock now trading down to, what do we say, almost 20-year lows, maybe more, would you be a buyer here?
I definitely would not. I would continue to sell the stock. I think, Bertha hit on sort of the crux of the issue is that, they're really at the crosshairs of potential or continued industry disruption, not only in the front end on the retail part, but certainly on the back end with pharmacy. And I just think there's too much uncertainty in terms of how they're positioned in the industry. So despite a 25% sell-off today and the valuation appearing to be, not that demanding,
right,
I think there are just better places to be in the market than sort of fight this battle.
Value trap, totally. Okay.
All right, final name on the docket today is Levi Strauss. Shares dropping there as the company's sales disappoint despite the rebounding of denim. Gabrielle Fonrouge, who told us about the popularity of denim, how come Levi's just isn't benefiting while denim is having its moment, Gabrielle?
I mean, that's exactly right, Tyler. You and I both know that denim is having its moment with consumers, but you're not really seeing that impact at Levi's. Last night, the company posted sales that narrowly missed expectations, and clearly Wall Street was expecting a bigger beat. This was a small miss, to be clear, but it's an important one because, like we said, denim and Western styles are trending. Levi is the OG of jeans, and if they aren't going to be winning with this trend, why wouldn't they? And even a few months ago, Beyonce named a song after Levi's, and that still wasn't enough to have a major impact on sales. And of course, guidance is another thing weighing on the stock today. The company handily beat earnings estimates, but despite that beat, it only reaffirmed its full-year EPS guidance. It's expecting sales to be up around 2% compared to estimates of up 2.8%. And for the current quarter, it's expecting sales to be up low single digits versus up about 5%. And now, Tyler, there's something else that could be weighing on the stock here. Levi's is in the midst of a strategy shift where it's selling more directly to consumers through its own websites and stores instead of through partners like department stores, Macy's and Kohl's. And now this strategy can be more profitable, but it's one that really hasn't worked out so well for some other retailers. So investors might be concerned about that as well.
All right, Gabrielle, thank you very much. Anthony, your view on Levi's?
Yeah, so this is another one where I think the reaction is a little bit too much based on, again, the market wanting more in the near term. And in the case of a strong quarter and the implied second half guidance not being as strong as people wanted. And of course, we've heard and read so many data points on the consumer that are clearly mixed at best. So retail feels a little bit like a landmine. But at the end of the day, Levi is a tremendous brand and franchise, arguably one of the top 10 brands in the world. And to the point of what they're doing strategically by focusing on more direct to the consumer and e-commerce, those trends are still very strong. So I think with this sell-off, I would definitely continue to hold the stock here, and the risk reward looks interesting.